More signs of a major market top, but if you're not looking at the individual sectors and what they're telling you, you're not going to see it. Welcome to Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me. Moving average, these are the colors on your screen. 21 days red, 50 days green, 100 days blue, 200 days tan. Looking at price versus momentum, price is a general direction. Prices are headed. Momentum is a rate of change. A bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at and support is where buyers are at. Remember, technical analysis does not predict prices. It can be used to determine the risk of trade, help with time of trade, and provide direction and path of least resistance. Charting offers possibilities, not probabilities, and not certainties. Remember, we're going to be focusing a lot of our effort here and attention on the sectors because, well, everything looks great with the large caps. Let's start out with the SPY. No change in price. Momentum remains bearish. We did see a small shift in 9-day moving average. Now price is above it. Green across your screen and mine as well. Let's take a look at what happened, and sure enough, it came down. Remember, this was a previously identified sell zone, and what happens when price gets above it, comes back down, confirms the sell zone now is a buy zone. Buyers outweighed the sellers. You've got this nice red bar here, volume price support, price headed higher. Remember, we talked about before, if there is an equal distance between these two buy and sell zones and the next one, well, remember we said it should get up to right around 440. That's where it's at. Will this be where sellers are at? Could this show up? Well, we'll find out over the next couple of weeks, but so far signal looks good as the bulls take price higher. But the story isn't in the SPY, nor is it in QQQ, which also looks good. The only thing shifting here between price and momentum is now a little bit of bearish bias on the 21-day moving average. Again, green across all the major moving average, green across the momentum screens. Let's go take a look at what's going on with the Qs. And same story, came down. I didn't draw it in, but clearly there is now an established buy zone up here. We'll need to add those lines at some point. You can see the volume. This is beautiful. This is heading higher. How much higher it goes, I don't know. But at some point, it will run into a sell zone. And it has not been established yet, like the SPY. But again, everything you want to see. Moving averages higher. Major supportive volume down here below. That, again, not where the stories are at. The first of the stories starts right here with the Russell 2000. Now, if you missed last week's episode or you haven't been following along, remember, small caps lead the large caps. So if small caps are heading lower, the probabilities are that the large caps will roll over and head lower. And at bottoms, you tend to look to the small caps. They lead the large caps higher. So keep that in mind as you look at this. So Russell 2000 not painting a great picture. Momentum bearish across the curve. Remember, last week price was bearish across all the major moving averages, but the 100-day has turned higher. In terms of the moving average, the only thing it's above now is the 9-day moving average, and that, as you know, is nearly meaningless. 1 month momentum is now negative. So over a 21 trading days, momentum is negative. 3 months is also negative. Let's look at the charts, because it's not painting a pretty picture for the large caps at all. In fact, you see in price, you see this consolidation pattern. This 6 months is either a topping pattern or it's a consolidation and heading higher. Way you have a hunch that it is a topping pattern is just, one, it's not following the large caps higher. Number two, everything above this volume support line here in red tends to get sold. You see, every time it pops here, sold, 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 sold. So that means it is up to the buyers to break this out right now. Sellers are in charge, telling you that this is likely a topping pattern. It's an indication that those large cap indices are maybe headed higher, but not for long. And when they mean revert, well, it'll be pretty sharp. Let's continue in the story to the transportation sector, because again, here's something you would want to see higher. If transportation stocks are headed lower, well, doesn't bode well for the major indices. Price and momentum unchanged from last week, now above its 90 moving average and virtually meaningless. But anyway, I still like to look at it as a leading indicator. If you see the 9 and 21 and 50, you know there's a good trend going on. 1 month momentum negative and rising. 3 month momentum negative and falling. Let's go and look at IWT and see what's going on there. And there is what looks like a topping pattern. There's your major volume support at 259. Price remains below it, telling you above that is the probabilities are sellers above that. And look at the moving average. It crossed the 21-day. And how do you know a trend change? It crosses down a moving average. So it crossed the 21-day in red, crossed the 50-day in green, and then it reconfirms at the bottom side. You can see the 21-day reconfirming. 50 days rolling over, it's slower, so it's going to take a little bit of time. We could see IYT go a little sideways until the 50-day catches up. It's hard to say, but what it does look like is it's telling you those large caps are headed the wrong direction. Let's continue on with the energy sector. XLE, once all green, now starting to turn red. Price momentum bearish across the board below all the major moving averages we're interested in. And now all of a sudden we're seeing these longer term momentums change. One momentum now negative and falling. So let's take a look at XLE, which, all we've heard was oil was going to go to 100, 120 a barrel again. There's all this demand, but oil company stocks not playing that game. And now we have some clear picture, that volume support line that we looked. This is where most shares are traded in the last 6 months. We were looking as a line of support and it didn't hold. And that was one of your big keys. So if the large caps, the SPY, the QQQs are going to head higher, why is energy not playing with that? It should be headed higher, telling you the economy is in expansion mode still for the energy sector, transportation sector, and small caps telling you not so much. Now, you see it came into the second highest level of volume right here at current price around 48, telling you that while it could come back up this next week into, say, the $50 price range, right now, the path of least resistance is down to 44. Let's take a quick look at crude. Well, I like to look at that big bounce in crude off the inventory report, but right at its volume profile line. But you'll notice the energy stocks didn't do it. Generally, you're here in the gold space. The miners lead the metals. Well, maybe in this case, you've got the stocks are leading the commodity because the stocks did not rebound nearly as much as crude oil did. Let's continue on and see what other signs of a topping pattern. How about the financials? Yes, you're going to see it in financials too. Price on the 21-day flipped bullish as it heads higher. Momentum unchanged. Other price indicators unchanged. Now back above the 9-day moving average, remains below the 2150. To me, these are the two most important ones out of the four. 1 month momentum in terms of price now negative and falling. Let's look at XLF and see what we could find, and sure enough, what starts to look like a topping pattern here. Remember, everyone's super bullish on financials. Hey, the banks are going to buy all their shares back. How's that working out for higher prices? What you see is prices got driven up into a sell zone. Now they're fighting their volume support line or volume profile line right here at around 3650. You see it crossed the 21-day moving average. It reconfirmed the bottom side, crossed over, but it's fighting that as the 21-day is kind of slowly flatlining, looking to roll over. It crossed the 50-day, reconfirmed the bottom. So look for maybe sideways action on XLF as the 50-day kind of curves around. If it misses that and continues to head lower, well, that is a bearish view of the financials. Also important in terms of where broad equities are headed. How about the industrial sector? Now this should look like the major indices. Momentum only changed there is bearish now on the 100-day, but look at that. Above all the moving averages, momentum is positive across 1 through 12 months. That is a pretty story. Not too much worried about the others. What signals when I have the bottom ones looking good, but what do you see here? There's that volume profile line. And is this signal that this is a bottom, that these are buyers into here, or are we seeing what are sellers above this that we're not seeing in SPY and QQQ? So this is, jury's out on this, not one that I would be looking at to do anything with because it's in an uncertainty. It's in an uncertain zone for me. So a lot of uncertainty in that, in the industrials. But if it's following the rest of them, it's telling you there's a potential topping pattern. How about the utilities? Price flip bullish on the 21-day moving average. I think the 1 month flipped from negative rising to negative and positive now. So that's a good sign on the utility sector. Normally when things happen here, it could be an indication of risk off event. But you see this volume profile line sitting right on this purple line, telling us that everything above here, the sellers are dominant up here. and the buyers are inching their way higher. So the buyers are trying to gain some strength here. But will it hold? Again, the problem with the utility sector is it's going in this kind of sideways pattern, hasn't broken out one way or the other. Everyone thought this was a bull flag, so which means they think this is going to rocket higher. Could be. You see on the 1-year chart the volume profile below, but on the 6-month chart, volume profile is right there on that purple line. Not enough to make a clear picture on where that's headed. How about the gold miners? Well, this is slightly better, but not much. No change in price and momentum, almost bearish across the board below all the major moving averages now. 1 month momentum is now negative and rising, but that's almost as meaningful as the 9-day moving average in those longer term momentum signals. Let's look at GDX. Not a pretty picture here. The suggesting now GDX is breaking below. And let's zoom out on this to the 1 year. You can see right here around 33, we'll just say almost 33.50. We'll round up slightly. The path of least resistance for GDX is 31. Get below 31. Let's zoom out to the 5-year chart. That's right here. Now you're coming down to 28. If you don't find buyers in there, well, your major support is at 22 or under. That's where the bulk of the buyers are at. Not that it may get that low, could, but this is signaling a risk-off event. Remember, gold mining stocks are a proxy of liquidity and generally give you an indication where the large caps are headed. In that chart, what we're looking at here tells you they're headed lower. Not good for the major equity indices. How about emerging markets? Another proxy of liquidity. They tend to run in tandem with GDX. Doesn't mean they're always side by side, but where one leads the other is likely to fall. Price momentum bearish across the board below the major moving average. Now 1, 3, 6 month momentum as negative and falling, telling you this thing's on the edge of a cliff. And the question is it? Well, let's go and take a look at EEM. Where are you? Here you are. Let's zoom, and you can see here volume profile, right? Selling above that now. That was briefly support. Now it's becoming very clear. Sellers above the volume profile line. Let's zoom out to the 1-year chart, and you can see it's broken the 200-day moving average. Could not get above the 21 or 50. Heading lower. There's a little bit of support here around the 50s, and after that it's in the 45. This telling you this is indeed a topping pattern. Another signal that is not positive for the broad equity market. How about one that's good? How about high yield bonds? Bullish on price, unchanged. Bearish on momentum. You notice there's a lot of bearish momentum on the ones that are headed higher. Not a major cause for concern because it's above all the moving averages. Momentum trends are all higher. Let's look at HYG real quick and see what's going on there. And it keeps, we'll zoom out a little bit. That volume profile line's been a very clear source that buyers are below here and at that line driving it up. And that, if there's one signal so far that's positive for the broad equity markets, high yield bonds. As I mentioned, every week people, go look at, if you're on these, go look at the yield that you're paying for, you're receiving for the risk you're taking. Doesn't make a lot of sense to me. Long-term Treasury bonds, here's another signal that's telling you risk-off event is coming. Price bullish across the moving average. Momentum slightly flipping bearish on the 21 days. We saw some selling last week. Unchanged otherwise. Above all the major moving averages now, 6, 9, 12 month. I think the 12 month was negative and falling. Now you're seeing they're all negative and rising with the 6 month. That's the next one that will likely turn green as we go to TLT. Maybe a few weeks away, but not long. But this is a great chart. You got a huge amount of volume support profile. The support below that telling you there were buyers here. Moving average 21 days, just crawling up to 21 days. Now over the 200 day. That is important if you're a follower of my buddy Jay Bravo. He is only buys, he says, if it goes over the 200 day, and then he kicks into his other signals. But anyways, over the 200 day moving average, 50 day is rising, 100 day is curved higher. All of a sudden, this tells you there's a lot of positive things going on. For TLT, you get over, let's say 151, 152, which should be the next destination. Came down here. If we look at the 10 day, I want to show you this. This is really cool. You look at the 10 day, you see the volume profile holding below that. So all this selling just came jammed right in to where there was buyers. And so it's telling you the people in the last 10 days below 148, roughly 148.50 are buyers, telling you the path of least resistance for TLT is up to this 151, 152. Break out of that, and well, then you're off to the races again. And there's another quick move up to, they say it's 157. And I can tell you that's where a lot of people that didn't buy will start buying. All right, so there's another sign for the broad equity market that's bad. How about gold futures? It's a little bit better than the miners. Remember, the metal follows the miners. 21-day price now flip bullish, but the 50-day is back bearish. It is remains below the 90-day and 50-day moving averages. 50-day more important, but above the 21-day, so that's good, above the 100-day. 1 and 3 month momentum are green, and that means they're positive and rising. 6 to 12 month negative and falling. 9 month is negative and rising. So there's a little bit of positive news in gold. Let's see what it looks like from a price perspective, and it's sitting solidly in the sell zone between 18 and 1820 after finding support at 1750, jammed up here. So it's looking like it's rolling over. Buyers now need to defend here and drive this up. Otherwise, you've got your volume profile line at 1775. If that doesn't hold, it tells you that this move by sellers has been met by, or moved by buyers have been met by seller 1750, then would remain the path of least resistance unless buyers can defend there. We'll see what they can do. But the miners aren't painting a pretty picture. How about silver? Once was the darling, everyone bullish on silver, but look at that, price momentum bearish across the board, below all the major moving averages. 1 month momentum negative rising, 3 and 6 month, more importantly, negative and falling. 9 and 12 months still on the way up. Let's take a look at silver and see what we've got going on here. Let's zoom out on this chart because silver is a story of a sideways pattern. Now, when you get consolidation patterns, they're most often continuation of a trend. Except when they continually get rejected. You've got this volume profile here at 2613 telling you that above that is sellers, and right now it came down into this buy zone, just the top of the buy zone. So where should silver go next? It should rally up into this $26 price range, and if it gets rejected there, it's going to come back deeper into the sell zone. So this is all about the buyers right now, all about the buyers. So nothing too exciting about that, not really something that I would say is even tradable. How about the dollar? Another risk off signal here. Price momentum bullish across the board above all the major moving averages. Momentum 136 negative or positive and rising. That's good. 9 month negative and falling. But that could change in not too distant future. That'll look to turn yellow next. 12 month negative and rising. These are all good signs for the dollar. And where its story is at, well, if we go zoom out on this 1 year chart, you see this downtrend line starting to break, and you can see this is where short sellers are at. So right now the shorts are defending 93. That means path of least resistance now is up near this 94. Break that, and you're up in the 97s. There's your risk-off move. And if we look at UUP, where we pick up the volume profile line, you can see that what it's suggesting is below 25, 27 on UUP. Buyers down here. And if that breaks above that, if sellers can't defend that, there is your risk-off catalyst for sure. Now, let's take a look while we're here real quick at what's going on. What does Momentum Time Pro say about some of these sectors? Now, I'll show you how to sign up. Remember, a lot of you have. This is a free open beta right now. The only way to lock in the eventual initial price for being on the beta test is to be on the beta test. Now, I realize it's a complex report. There will be improvements made to make it easier for people to understand, but it is a complex report, but it's very useful. Let's look at what it's saying across some of these things. How about the gold miners? No position on a rolling 3 month. A lot of sell signals telling you that Momentum Time Pro picked up a while ago, these sell signals. How about we look at Russell 2000? It's gone from a max position to a mid position. Now it's holding on a minimum size position, telling you no strength in this. Well, it's picking up the same thing the charts are. A lot of strings of sells there, so it's saying no confidence. Only hold a small position if you were so inclined to. How about transportation? Remember, this leads the big caps lower. No position. It caught that a while back on a rolling 3 month, no position, 36 consecutive days of sell signals. Look at same thing with the banking sector. Small banks, KBE regional banks, no position. How about the large banks holding a minimum size position? So it's telling you in here, risk off. How about the energy sector? Remember, at one point it was pretty strong on that. Now it's holding a minimum size position. So you can look at this, and even the Qs, it's kind of saying, well, it's got a max position on the S&P, a mid position on Q. So it's not confident on the play of technology. Let's keep looking at what else it's telling us on the bond sector. Well, here, how about this? How about foreign emerging market? Either no position, blank, hold, which would be going down a minimum position. So not a lot of confidence there. How about, so it's giving you these signals, and it's really cool. Look at the bonds. TLT is ZROZ, probably going to max position soon. 2 consecutive months, 42. That's 21 days in trading month, 2 consecutive months, telling you if you would have followed this report 2 months ago, you have plenty of time to jump in on that rally. So you know it's telling you, hey, risk off here. Even on IEF, same thing. Treasuries, looking at currencies. Well, you've got the same story on the dollar. Over 21 days is a month, so now you're looking at look a little about 5.5 weeks of buy signals, and you can see the other direction there. This is about to start picking up a recommendation here pretty soon, and you can see it's kind of told you. So if you were following the rolling 3-month on this, you wouldn't have a position yet, but if you're following the daily signals, it's giving you ample warning that this is going to start triggering a buy signal at some point soon. And the timing of that will be pretty good. Now, if you're not signed up for it or you tried to and you're not sure how, here's what you need to know. You need to go to the link in the description below or to momentumtimerpro.com. Disable your pop-up blocker because, well, if you have it turned on, you won't get this box. Put your email address in. What will happen is you will get a welcome email. If you don't get that and you use Gmail, well, then you'll need to go to your promotions folder, log in gmail.com, check your spam folder, check it with your other services too, because odds are it is there. And then on Monday, you will get your first report, and you'll be all set to join in the beta. And then we will be at some point releasing international ETFs in an enhanced version when we go paid, with a lot more help for those of you who struggle with the complexity of it. But what we can say, it works. I'm Steve Van Metre. Thanks for watching. We'll see you on Monday for the macro show. Bye now. The content of this video is provided as educational and informational. It's not intended to provide investment advice. This show is not to be construed as recognition or solicitation by a security, financial instrument, or participate in particular trading strategies. This video is prepared by Steven Van Metre. Personal capacity opinions expressed in this video that do not reflect the view of Atlas Financial Advising or Steven Van Metre Financial.